SCORE Northeast Wisconsin and WHBY are pleased to bring you Biz Talk, a chance for you to hear from entrepreneurs and professionals as they share their experiences. From starting to sustaining growth, learn the skills needed for your business to be successful. If you miss anything, you can catch the Biz Talk podcast at score.org/Northeast Wisconsin. And now from the Myron Construction Studio, it's Biz Talk on WHBY.
Good morning, everyone. Welcome to Biz Talk with SCORE. I hope you're having a great weekend. This week, our guest will be one of our longtime sponsors, Kurt Heling. But joining me as co-host this week again is Rick Sense. Rick, how are you doing?
I'm doing well, Terry.
Thanks.
Happy May.
Same to you. We can actually see some warmer weather coming, so
Yeah.
the bike should be out soon. All right. So joining us again, as I said, is Kurt. Kurt, can you tell us a little bit about the 2025 tax season? And I don't want to say it wrapped up because I know April 15th seems like the end, but it's not. But can you talk a little bit about what happened this season?
Sure. This year for income taxes, we had a number of different things coming into play, a lot of new changes coming into 2025. Just kind of a overview of what those are. Number one was there's no tax on tips anymore. A lot of these have some, I'm going to give the broad brush of these. There's a lot of quirks and sub rules to these, but the broad brush, no tax on tips starting in 2025, no tax on overtime starting in 2025. And that by overtime, they mean if you have time and a half, it's that half portion, not the entire time and a half, but the half of time and a half is excluded from income. People 65 and over within certain income limits were eligible for a $6,000 deduction on top of what their normal standard deduction would have been, or itemized deductions. That was a new deduction that came into play. One thing to keep in mind with this, a lot of politicians out there, and I'm not going to name names, ran around saying that there was no more tax on Social Security. That was a half-truth. What they said was millions of people in the U.S. will no longer pay tax on Social Security. Well, it's a half-truth because of this increased deduction for those 65 and over, it offset the taxability of Social Security. Social Security is still taxable. So millions of people no longer pay tax on Social Security, but millions of people in the U.S. still do pay tax on Social Security. So that's where this comes into play. In addition to that, cars made in the U.S., sold in 2025, they had to be new cars, and they had to be manufactured in the U.S., so we always had to get the VIN number, the vehicle ID number for these cars. The interest on those loans was excluded from income or deductible from income. And then there was the SALT limit. And what SALT is state and local taxes. And going back to 2017, that has been limited to $10,000. And state and local taxes are made up of state withholding off your W-2 payroll, any state estimates you paid in, state taxes you paid in with your return from the year before, and your real estate taxes as well. That used to be limited to $10,000. Now that goes all the way up to $40,000. So one of the things we saw this year was you saw a lot more people itemizing deductions that hadn't for the past several years because of that expanded SALT deduction that was available. So that was a big change, and that came into a lot of planning steps too, because if you remember years ago, you'd have people that would maybe double up on property taxes. And then when the $10,000 limit was in there, it didn't make as much sense anymore. Well, now sometimes it does again. So we have that new planning step involved. So those were a lot of the things that we saw in 2025 that were new. On the federal side, one big change that happened on the state side of things, this is the first year that it came into play where individuals 67 and older, not 65, but 67, this is a state rule, got a $24,000 potential deduction for retirement income. And this is kind of correlated to the $6,000 for 6,000 for people 65 and over, but the age is different. It's 65, and it goes all the way up to 24,000, but it's only on retirement income. So IRA money, annuity money, pension money could be excluded. One quirk with that is if you took that deduction, you didn't get your property tax credit or an itemized deduction credit or any other credit. So we'd have to kind of weigh out, does it make more sense to take the deduction for 24,000, or if a married couple 48,000, or do we take the credits? 9 times out of 10 we were better off taking those deductions, but there were a few instances where it was better off to not take the deduction, take those credits.
So with all of those changes then, and every one of them having exceptions, or rules attached to it, it sounds like the tax code got significantly more complicated this year.
It did, and every time they have these overhauls, they become more complicated, and we go through a lot of continuing ed to try and get up to speed on exactly what those quirks and restrictions and income limitations and everything are that are related to them. And this was a year where it really, because it was actually retroactive to January 1st, but it got passed halfway through the year. It literally got signed on July 4th. The IRS had a hard time catching up on the forms related to it. For instance, W-2 forms going forward now will have overtime, a box for overtime wages in there. They didn't have a chance to do that for 2025. So we had to go off a pay stub, a person's final pay stub for 2025. So there were just quirks like that things didn't get implemented in time, and they were literally making up the rules as they went along to go through some of these what ifs and what does this mean, and here's what we really mean by this. And an example of that is with tips. They talk about qualified tips. They have to be voluntary tips. Okay, why wouldn't you have a voluntary tip? Well, have you ever gone to a restaurant and you sit down and it says groups of 8 or more will have an automatic 18% gratuity added on to their bill? That's not voluntary. It's automatically added on. That's supposed to be carved out. How do you do that? It's really hard to split those hairs. But those are the sorts of things that they want you to be able to break down.
Is that going to lead to potential issues in the future if someone's audited?
Potentially, if they're audited. With 2025, what we're seeing and what we're hearing is there's going to be a lot more leeway, I guess, for lack of a better term, because those rules are just getting implemented. For instance, one of the other things with tips is they're supposed to be reported on a government form. Okay, W-2, that's fine, but they don't get broken out on a 1089 form for your self-employed people. They might get broken out on your Square receipts when you're dealing with your credit card company. You can have the Square, whatever credit card processing company you go through, they'll have the gross amount on there, and then they'll have the tips on there, but that's not technically an IRS form. So they're going to have to work with that as well. So there's a lot of these things they're going to have to work through and get the details ironed out on.
Okay. Well, it's actually a good time to talk about some of the 2026 changes, and we'll come back to 2025. But with all the changes that have happened, what else is going to change for people this year? What are some of the key changes?
So the big one that's coming up this year for individuals is the donations, where you're going to be allowed to have $2,000 of donations deductible, even if you don't itemize. This is new. This goes back. There was something similar many, many years ago, probably before even 2000. Back in the 90s, they had something with this. But for the last few decades, if you wanted to take a donations deduction, you had to be able to itemize. So this is an opportunity to be able to do that without itemizing for the first time in many years. That's probably the first one that's going to affect the most people. A lot of people I talk to say, I don't even bother keeping the receipts. I don't itemize. It's not worth it. Well, now this year it's going to be.
So as people start those deductions, is that something where they should be adjusting their withholding if they want to stop paying as much tax in before the end of the year?
Well, reviewing your withholding is something you should be doing on an annual basis anyway, based on what your income is going to be for the current year and any other changes that might come up. You could have situations with respect to the donations. You could have additional itemized deductions. One of the big things that really affects it is kids, whether you have new children in the family or if you have children that are getting older. And one area where we see a big change is when kids go from age 16 to 17, the child tax credit, the child tax credit is another change that happened this year. It went from $2,000 to $2,200, but that's only if the dependents are under age 17. Once they become 17, that deduction, that credit is only $500. And they're not in college yet, so you don't get any college credits as well. So I always tell people, when your kid's 17 years old, they're not worth anything to you. And most people nod their head and agree.
Okay, so as we go back and just talk about 2025 a little more, are you seeing then with all those changes, they are all sounded favorable for in terms of getting money back? Are most people getting refunds this year?
I saw way more refunds this year than the previous 2 or 3 years. For several reasons. One was with all the new changes, there was just a huge increase in the refunds. The tips, the overtime made big differences. The 65 and over $6,000 deductions made a big difference. The interest on cars, not as much of a difference. The state and local taxes, that made a big difference for people. More people itemized from that situation. What we were seeing in years before is we would see a lot of people owing because, for instance, when I talked about the situation with the kids, they didn't have their withholdings adjusted properly. And this kind of goes back to COVID originally. There are a lot of government programs involved with COVID where people were getting credits and things like that. When the withholding tables changed, those credits kind of masked the change in the actual income taxes. And then when those credits went away after COVID, what happened was people all of a sudden started owing when they had never owed before, and they couldn't understand why. They weren't doing anything differently, but the rules changed, the credits went away, and all of a sudden they ended up owing. A lot of those situations we were able to help people get cleaned up as well over the last couple of years.
Okay, so we are at the point where we're going to take our first break. You are listening to Biz Talk with Score on WHBY, and we'll be right back after these messages.
Welcome back to Biz Talk with Score on WHBY. I'm Rick Sense along with Terry Pinch this week, and we'll get back to our guest Kurt Heling in just a few moments. But first, I'd like to take a moment to talk to you about Score. Score Northeast Wisconsin serves a 29-county area in northeast and north central Wisconsin, and we have more than 50 volunteers, each an expert in their field, offering entrepreneurs no-cost and confidential mentoring. Those areas of expertise include IT, social media, marketing, cash flow, accounting, strategic planning, workflow, HR, retail, best practices, and many, many others. In order to register for a no-cost confidential mentoring session and or to learn more about Score Northeast Wisconsin, please visit our website at score.org/Northeast Wisconsin. You can learn more about how the Score chapter can assist you with starting and or growing your business, and you can complete an application for a mentoring session. Simply complete the online form and submit it to Score. Within a few days, a Score mentor will be contacting you to set up a meeting. Remember, Score is no cost and offers experts who can offer you assistance in many different areas. To get started, visit our website at score.org/Northeast Wisconsin. And to support small business people, Score Northeast Wisconsin is always looking for new mentors. If you have experience that you would like to share with others, we'd love to talk to you. We welcome volunteers with experience in all aspects of business. Small business owners need your help, and your experience can make a real difference to their success. Go to score.org /Northeast Wisconsin. Click on the volunteer button and fill out the short application, and we'll get back to you to explain more. And finally, this reminder about the Biz Talk with Score podcast. The Biz Talk with Score podcast brings you the same real-world information and insights from experienced entrepreneurs and business leaders, just like the Biz Talk show does on WHBY. The Biz Talk with Score podcast is available when you are. So listen and subscribe today, tomorrow, or whenever you want. Available on most podcatchers and podcast apps. So thank you again for joining us on Biz Talk this weekend, and we will turn the show back over to you, Terry.
Okay. So we're again talking to Kurt Heling from Heling Associates. And Kurt, let's go talk a little bit about what people should do if they have to file an extension. What do they have to do to get it done?
Well, first of all, it would need to have been filed by April 15th for individuals and March 15th for businesses, businesses being partnerships or S corporations. I talk to people occasionally and mention that business deadline, and a lot of them are surprised because they think everything is April 15th. With partnerships and S corporations, there's typically no tax due with those, so we do those as a matter of just processing through the returns, and if they're not done by then, we just automatically do the extension. Nothing due, nothing for the clients to sign, and a lot of times they don't even know it's been extended until after the fact sometimes, which there's nothing inherently wrong with that. And even on the individual side, we'll do the extension as opposed to trying to cram it out a lot of times by April 15th because of the fact that I'd rather have the return get extended and be right than cram it out on April 14th and have there be incorrect information in there or things that we're not sure about or missing information. I'd rather have it be correct and extended and correct than not extended and incorrect. And then you have issues with notices from the IRS, notices from the state, and things you need to deal with that way. Now, that said, you want to have the actual income tax paid by April 15th. And you say, well, how can you have the tax paid by April 15th if you don't have the return done? A lot of times we can get very good, very close estimates done by April 15th so that you don't run the risk of having interest and late payment penalties running after the fact. Because once you get past April 15th, if you've got a balance due, there's interest and late payment penalties running in there. The only thing that the extension really does is it avoids the late filing penalty. And a lot of people have some misconceptions about that because I've had people say, well, I can't pay the tax all on time on April 15th. Can you file an extension? I said, I can file an extension, but you're still going to have late payment penalty and interest running on that because they want the money by April 15th. They'll give you till October 15th to file the return without a late filing penalty.
And if they do owe money, then are they paying interest until they pay the final or submit the final return?
Correct. So that interest and late payment penalty runs from April 15th until May 1st, May 15th, June 15th, all the way up till October 15th if it doesn't get filed until then, or beyond. And if you get beyond October 15th, then you're looking at late filing penalties as well, and that gets really expensive because that runs at, I believe it's running at 1.5% a month. So figure 18%.
So for a person, probably a business owner being with a complex return, they should be relying or working with their accountant to get a good estimate of what that tax will be April 15th, even if they can't get the tax return done. And then
Correct.
They may have to pay some more, but do they try to overpay on April 15th or do they just do the best they can to pay?
Well, in some cases, we'll have them overpay because if they're in a situation where they normally pay quarterly estimates anyway, we'll want to pay enough to cover not just what's due on April 15th, but also what would be required for that first quarter estimate, which is also due April 15th. So we'll try and combine both of those into that April 15th payment. And then if there's an overpayment, we can apply it to the next estimate coming up.
Okay, so there are ways for them to manage it within their kind of their plan, but the biggest issue is just not letting the IRS and Department of Revenue see them not pay their taxes on time or tell them why they're not paying their taxes on time.
The not paying part, and especially in the not filing the extension part. Exactly. That has to get done by April 15th.
Okay, so is it different with the state versus the IRS, or are they similar?
It's similar. The extension that you file for the federal is also valid for the state. So there's not a separate state filing for the state of Wisconsin as far as an extension goes. The state, if you don't do an extension, they'll have an automatic $50 penalty, even if you've got a refund coming. But if you've got the extension, you're fine. You don't have the $50 penalty. If you do owe money, the state does charge interest on that as well, and that starts out at 1% a month and then eventually gets to 1.5% a month beyond that, which, goes from basically 12% to 18%. What I always tell people, if it's a matter of the federal or the state, pay the state first because their interest runs higher, and if they've got a balance due and you're not able to pay both of them, the state will come and shake it out of you. They'll zap your bank account, and tell you about it later on. Whereas the feds are, even though it may be a bigger dollar amount, they are much easier to work with and easier to get payments plans set up with.
Okay, we're at the point where we're going to take our second break. You're listening to Biz Talk with Score on WHBY, and we'll be right back after these messages. Welcome back to Biz Talk with Score. This week we're talking to longtime sponsor Kurt Heling from Heling Associates. But before we get back to Kurt, I have one quick education update for you. First of all, if you go to our website at score.org/Northeast Wisconsin, you're going to see a completely new layout. The website has been completely updated, but we still have a lot of learning opportunities there. The tab's been changed. It's now called Learning. So you click on that at the top and then click on online courses within that tab. And you're going to see one coming up that looks really interesting for some people. And it's called From Tool Belt to Owner, a 10-week trades workshop. So it's a 10-week series of events that helps people who are in the trades understand what they need to do to move into owning their own business. So it's from 6 to 7:30 once a week, and it's a really good opportunity to learn. Now they're kicking off with an in-person event, which you don't have to attend. It's in Texas, I believe. But you can take the 10-week series. It's $100, and it's a really good opportunity to learn more about setting up your own business for the people in the trades. So again, it's score.org/Northeast Wisconsin. Click on the Learning tab, and then click on the online courses and type in Trades Workshop Series, and you'll find it. So with that, Rick, I'm going to turn it over to you.
Alrighty, thank you, Terry. We're talking with Kurt Heling this morning from Heling and Associates. Kurt's a longtime sponsor of the program, and we do appreciate that, Kurt. I just have to kind of ask this question, I guess, this year. With everything we talk about with the changes in the tax law, what's the weirdest thing you've seen this tax season?
So one of the weirdest things that I saw this tax season didn't really have anything to do with the new tax rules itself. Had to do with a couple of clients. I had two clients within 2 weeks of each other bring in notices from the IRS, and they both had to do with unreported income. And the income that wasn't reported, showing on the notices, said that they had gotten anywhere from $20,000 to $30,000 worth of income driving for DoorDash. And in both cases, they said, we never drove for DoorDash. I mean, one's a professional salesperson. He's out on the road constantly. He doesn't have time to do DoorDash. And the other person, same sort of thing. They're in a professional situation, the mid-50s. They're not driving for DoorDash. Okay? So we established they never drove for DoorDash. So what happened was somewhere along the line, their IDs got stolen. And the people with the new IDs use those IDs in order to drive for DoorDash. And I can get to why people fake their IDs for DoorDash in a little bit. But they used these IDs for DoorDash, got paid by DoorDash, never reported the income because they were using a fake ID. And this was back in 2023. So it takes the IRS 2.5 years to come up with, gee, where's this income? And you didn't report the income. The income's reported on 1099, but you have to go to DoorDash's website to get the 1099. If you never drove for DoorDash, you have no reason to go to DoorDash's website to get a 1099. So it sits out there for 2.5 years. So what happened was they bring in these notices. In these cases, what we did was the first thing I advised them to do was go on the IRS website and get an IP PIN. So that's a personal ID number. It's 6 digits long. It goes on your tax return, and you get a new number every single year. The IRS mails it to you, and that helps prevent any fraud on your tax return itself. And then secondly, there's a form 14933 that you can do to report the fraud, and you complete this form. You attach the notice that you got from the IRS with it. You file it. It's going to take months to get it cleaned up, and so what will happen is we'll have this. We attach all the documentation and everything. What will happen is, even though we file this form, I completely expect these clients are going to get more notices simply because of the fact that the IRS has these notices come out computer generated every 60 to 90 days. It may be 3 to 4 months before somebody even looks at the letter, the form that we're sending in to let them know that this is a fraudulent case, and then they've got to delve into it and everything else related. So it's going to take quite a long time to get these resolved. But that was probably the strangest thing that I saw this year. And this fraud is, I've seen some strange fraud situations over the years, and it's one of those things. We had a situation that we heard about over in Denmark school district. They got into the payroll systems over there and got a lot of employee information over there. That was on the news. I talked about this situation. I had a reporter reach out to me through a mutual connection, and within a half an hour after this airing, I got a call from a lady in Clintonville said the same thing happened to me, only it was Uber instead of DoorDash. But it was the same sort of thing where she got the notice from 2023, and they said that she had this Uber income. And so I talked her through it a little bit, and, I've kind of kept in a little bit of contact with her since, as far as her trying to fight that. She's trying to work it through on her own a little bit. But there's a lot of these situations out there. There was a medical practice, a well-known medical practice, probably about 10 years ago that got hacked. And they got into all the doctor's information. So that was a mess. I had a client who was a physician there, and they literally we went to file the return, and the return got rejected from electronic filing. We paper filed it and got a letter back from the IRS saying if you're trying to amend your return, use a 1040X, don't just paper file. We got the taxpayer advocate involved, and the taxpayer advocate is a liaison between the IRS and taxpayers to help correct situations and clean situations up that, unusual situations like this. What we found out from the taxpayer advocate is someone had gotten into the payroll system at this medical practice, and they had gotten the exact amount of the federal wages, the federal withholding, the state withholding, and started to file a tax return. Well, then we also found out that because this person had a parent that passed away, and these people on the other end were pretty sharp. What was everybody's password many years ago? It was their mother's maiden name. Well, mother's maiden name was in the obituary of the parent that passed away. So then they got into bank information. They reported the mortgage interest. They reported the interest income. They didn't get in their investment account, so all that was off the return. And then they put down about $50,000 worth of donations, got themselves a nice big fat refund. And so we're talking with the taxpayer advocate at that point in time, and we said, okay, well, where did this refund get deposited into? And they said, well, I can't tell you that bank account. I said, well, was it a bank account ending in X, ABCD? Well, no, it wasn't. And well, that's our client's bank account. Here it is. Send a copy of the check. Our clients had to go through and send copies of their driver's licenses, the source documents that they had, the checking account that they had, and really, prove who they were and what they really made before they would accept the return that we filed. But it was a mess. And again, that's a situation where they now get IP pins every single year. Husband and wife each get a different number every year. And they've been going forward filing that way. But I mean, you see these things happen. You wonder, well, how can they happen? Once they get this information, they may sit on it, on the dark web for years, and then all of a sudden it pops up. So personal protection, you really want to get these IP pins for your tax returns, and just do your due diligence as far as your fraud control.
Could you repeat for listeners again, how does one get the IP pin?
The IP pin you can get off the IRS website, irs.gov.
It's just
and if you do search an IP pin, it'll walk you through the process there.
And it's renewed every year.
It gets renewed every year. Every January, you will get in the mail, not email, because the IRS never emails. In the mail, you will get your IP pin.
Okay. So as we think through all the changes we've seen with artificial intelligence and how much easier it is to steal money electronically now, what do you tell clients they need to do to help protect their personal assets? And we've heard about the tax return part. What should people be thinking about to protect themselves?
Well, the IP pins, I mentioned that. Have a credit monitoring service just for your regular credit card monitoring, your bank account monitoring, everything that way. And there's different services out there. A lot of the banks offer that service now. A lot of the credit card companies offer those services. So do your due diligence that way as far as keeping on top of those things, and really just keep an eye out for anything that's unusual. Some of the banks, I will say, some of the banks actually go to an extreme, but it's I almost appreciate it. I've been on vacation someplace where all of a sudden I'll get I'll be on vacation and I'll get a phone call or a text saying, did you just make a charge at XYZ in Florida? And, you click yes or respond that you did, and they'll let it go through. Otherwise they would block it. And, it's something that's appreciated, because if that didn't happen, that gets out there, they can just clean you out in a hurry.
And I'll just say what I found with credit card companies too is they're noticing small dollar transactions that are completely out of line with what you've done before. So about 2 years ago, we had one where somebody got our credit card number. I think it was for a local transaction to happen, but they bought 2 small items in California at a Home Depot and another store, and with the credit card company contacted us like within hours and said, were these yours? They weren't. And they put a hold on it. And then they canceled our card and got us new cards in the mail right away. It was I didn't like having to get a new card, but it was better than having somebody charge all the money.
And what happens is they do the small charges first to test it before they do the big charges.
Yeah.
So that's, they do the small charges to make sure it's going to go through, and then they go try and do the big charges if those small charges go through.
Yeah. So switching topics a little bit, Kurt, last month we did a big series on financial literacy. In fact, Rick and I were on a show with Tom Zalowski, talking about it as well. And as you think about financial literacy, how do you tie the whole concept of financial literacy to taxes and tax returns and planning for running your business, paying the taxes of your business?
I would tie it in from the standpoint of you don't necessarily need to know how to do your own taxes. You don't need to know what every line on every form means, for instance. You don't need to know everything about the rules behind different things that are flowing through. You need to understand the basics that apply to you, that apply to your business. Think about it this way. Do I need to know how to change the transmission in my car? No, but I need to know when it needs to be changed. That sort of a thing. Do I need to be smart enough that when the check engine light comes on, I need to take it in and get looked at? Those sorts of things. So same sort of thing on taxes. You don't necessarily need to know every rule behind every line on every form, but you need to have a general understanding of the rules that are out there, what applies to you, and how to make the most of it. And that's where you need to have those conversations with your accountant so that you can get the best result at the end of the day. And you need to have those conversations midway through the year, towards the end of the year, not just in February, March, and April.
And as you've been talking to clients over the last few months and getting their returns, are you seeing a lot more, I don't want to call it fear, nervousness about taxes and what it means? And are they understanding all of the changes, or does it take a lot more time on your part to explain what's happening?
I think they understand. I think most people understand a lot of the concepts behind it, but sometimes they get a little confused, especially when you have new rules coming in like this year. They get a little, they read the first three lines of something online, but they don't read into all the details. Let's put it that way. And we all know how the internet is and how you can go on the search engines and get very basic information. And so a lot of people do that, but they don't get into the details of what does affect them and what doesn't affect them. Or they hear certain sound bites of things through news or, what you might call clickbait, and see these things on clickbait and in a way, that's what they think is always true 100% of the time. And that's where we run into situations where we say, okay, here's how this affects you. Yes, it applies. No, it doesn't. This doesn't apply to you. Maybe your income's too high, or for some other reason that it doesn't apply to them.
Okay. So looking back at what's changed over time with your business, why is it, and how do we reemphasize how important it is for people to consider having an accountant to help them at year end with the complexity that we currently see?
Well, we talk a little bit about AI. AI, the general definition of AI is artificial intelligence, but every once in a while, AI means artificial ignorance. And what I mean by that is, I was reading something where they talked about a software trap that people run into, especially people that do their own taxes. The software will prepare the return, but if the preparer doesn't know the laws and rules and what the outcome should look like, the return is going to be wrong. And the example they gave in what I was reading is somebody who used a DIY, do-it-yourself type software for the return and e-filed it electronically. The software didn't put any tax on Social Security. IRS catches the error, sends them a notice saying that you owe tax on 85% of the Social Security income, and typically these softwares will tax that, but maybe they somehow overrode it or got it to not charge tax on that Social Security. Just because you can get the software to do something doesn't necessarily mean it's right and that the IRS is accepted as it's filed.
So as you look at the world we're in today, it kind of feels like with the added complexity every year in the tax system, with the challenges coming from a world of high technology like an artificial intelligence, it sounds more and more like there's more reason for CPAs and tax returns and doing that the right way.
Yeah, there really is. I mean, we use AI internally ourselves too, and we'll use it to help research things. But a lot of times what it'll do is it'll give us the general definition, but it'll give us the source of that as well. Well, then we go into the source and make sure we've got all of the quirks, the nuances, the what ifs, the exceptions, and those sorts of things, just to make sure that the situation is going to apply the way that we're looking for or not apply. Because you can't necessarily just go out the first 3 or 4 lines of what pops up when you go into some of these search engines.
Yeah, it's something we're seeing quite a bit within SCORE is the idea of hallucinations and people maybe reacting too quickly to what they read from artificial intelligence and not confirming that it really makes sense.
Right.
But okay, well, we are going to take our final break. You're listening to Biz Talk with SCORE and WHBY, and we'll be right back after these messages. Thank you. Welcome back to Biz Talk with SCORE on this Saturday morning. We'd like to thank our sponsors for their generous support of Biz Talk. Thank you to Kurt and Heling & Associates. Heling & Associates helps small businesses and individuals not just prepare tax returns, but plan for the future. Heling & Associates, personal connection, positive results. Wherever you are in life or the life of your business, Johnson Financial Group works to match the banking and wealth services needed to help you complete your mission. Thank you to the Business News for promoting our program in the biweekly business newspaper serving Northeast Wisconsin. They have the latest business news and topics for this region. We are grateful for the support of Community First Credit Union. At its core, Community First is a community of member owners where people work together to improve their financial well-being and help one another. New North, the Regional Marketing and Economic Development Corporation, is an active supporter of SCORE. The New North facilitates economic growth and helps people in this region live their best lives. And thank you to Baird. Since 1919, Baird has guided families through investment, trust, estate, and tax planning advice. So no matter what the future brings, you can be confident you're ready. Because your family is the Geenan Group at Baird's focus. And finally, we would like to recognize the David L. and Rita E. Nelson Fund within the Community Foundation for the Fox Valley region for their generous donation to Biz Talk and SCORE Northeast Wisconsin. And Rick, I'll turn it over to you to wrap up the show.
All righty, Terry. Thank you very much. Kurt, can you give listeners an opportunity of where they can find out how to get more information about you and your business and even to contact you?
Yep. Go to our website, helingandassociates.com, Heling, and all spelled out, associates.com. And you can get on there. You'll have links to contact us to set up an initial meeting. You can email us from there, get our phone number off there, 920-886-2241. And you can use that website as well. We've got a number of different tools on that website that you can look at as well that are useful in terms of different financial things you might have going on, whether it's amortization schedules or different types of financial tools that you might be interested in taking a look at. Really useful. No charge to get on that from the website. It's a pretty useful tool. And then we've also got some of our client upload tools on there where we have secure portals to bring information through. So you can get registered on there as well once you do start working with us. But go to the website, helingandassociates.com.
Kurt, I have to, with the last couple of minutes we have of the show here, I was just wondering if you give listeners an update of where your business is at right now. What kind of things challenges are you working on?
Well, we've worked through some challenges staffing wise and coming through this year, starting last summer into this tax season, we've got a couple of new people in our team, and that end of it has really gotten a lot better from the standpoint of the team members that we have and the full-time year-round people that we have, as well as the seasonal people we have. They knocked it out of the park this tax season. And this is a group, we've got 10 full-timers year-round and then another 4 seasonal people that come in between January and April 15th. And They just did a phenomenal job this year. These are people that are working, especially the full-timers are working nights, weekends, pretty much giving up their lives from January through April 15th. So this is the time of year they get to start having their life back and having a little bit more fun on outside the office.
Well, Kurt, it's always great to have you on the show. We learn something new every time you're here, and our listeners are very appreciative of that too. So thank you very much again.
Always a pleasure.
Okay. And so for listeners, you can go to our website at score.org/Northeast Wisconsin and find shows back for the past few years. You can also go to various podcatchers like iTunes, Spotify, Amazon Music, Buzzsprout, and you'll find shows since 2024 as well. We hope you get a lot out of the show. And again, we're on WHBY on Saturday mornings, and you can find us on the podcatchers the following Wednesday. So everybody, I hope you had enjoyed the show, had a great week, and we'll talk to you again next weekend.